is the Managing Director of Harris Cotherman Jones Price and Associates in Vero Beach, Florida. He's also the Vice Chair for the American Institute of Certified Public Accountants, the National Professional Association of Certified Public Accountants. AICPA has more than 330,000 members. Welcome, sir. And you have 5 minutes to make your statement.
Thank you, Chairman Velasquez. Good afternoon, Ranking Member Graves, and members of the committee. My name is Robert R. Harris, and I'm Vice Chairman of the American Institute of Certified Public Accountants. I'm a CPA and a partner in the CPA firm of Harris Cotherman Jones Price and Associates. We are located in Vero Beach, Florida, and are a small firm with 11 CPAs. My firm's clients are primarily small businesses and individuals. We do financial planning and tax service for most of these clients. I'm here today representing the American Institute of CPAs. The AICPA is the National Professional Association of CPAs with more than 360,000 CPA members in business, industry, public practice, government, education, student affiliates, and international associates. As a result of the economic crisis precipitated by the subprime lending, the administration and Congress felt that financial regulatory restructuring was necessary. The administration called for a new regulatory scheme that encompasses strong, vibrant financial markets operating under transparent, fairly administered rules that protect America's consumers and our economy from the devastating breakdown that we've witnessed in the recent years. The administration also said that to accomplish this goal, it would be necessary to seek a careful balance that will allow our markets to promote innovation while discouraging abuse. To this end, Congress is looking at a number of financial activities with an eye towards how to appropriately and adequately regulate those activities. AICPA supports the goal of enhanced consumer protection, but we believe it is critical to consider the plan's effect on small business to ensure that it does not stifle the innovation, creativity, and the inventiveness of the American entrepreneur that has driven our economic engine. In this context, I would like to discuss the Consumer Financial Protection Act of 2009, H.R. 3126, which would create the Consumer Financial Protection Agency, or CFPA, and its effect on small business from the point of view of a CPA. The stated aim of the Consumer Protection Bill is to protect consumers by consolidating financial consumer protection in one agency. This would be a safeguard against consumers getting inappropriate loans that they could not afford to repay. But the bill is much broader than protecting consumers when they borrow money. The CFPA, as introduced, would cover most CPAs because its scope of authority includes tax return preparation, tax advice, financial planning, and pro bono financial literacy activities. The accounting profession's pro bono financial literacy programs, 360 Degrees of Financial Literacy, and feedthepig.org, which are designed to teach consumers and young people how to make smart decisions, would be covered by the bill. Our own Lisa Baskfield, a CPA from Minnesota, was recently awarded the Civilian Services Medal for providing pro bono financial advice to more than 2,000 armed services members. Her advice would have been covered under this bill. Many of the members are affiliated with CPA firms that are small businesses and will be adversely affected by the bill, and many of their clients are small businesses, sole proprietorships, and partnerships. It is impossible to separate the advice and tax service given to these small businesses from the advice and tax services given to the owners. They both are covered by the bill. Thus, both would be covered by this bill. Additionally, any person who provides a material service to a covered person, such as a financial institution, is included in the definition of a covered person. My practice of forensic accounting would subject me to the CFPA when I do a forensic audit of a lender making consumer loans, even though I do not have direct dealings with the consumers and provide no services to consumers. As a CPA, I can tell you that CPAs are heavily and effectively regulated by three sources: state boards of accountancy, the Internal Revenue Service, and the AICPA. This regulatory structure protects consumers first, with the first rule being service the public interest. The bill consolidates the enforcement of a number of federal consumer protection laws into one federal agency. However, it adds another layer of regulation to the accounting profession without consolidating any of our regulation. This regulation would be costly because of the assessment that would be levied by CFPA, and it will take significant time from our ability to serve our clients because we will be subject to periodic examinations by the agency. These are all costs that will ultimately be borne by our clients, the very consumers that this bill is supposed to protect, and it will do so without any commensurate benefit. CPAs are asking for an exemption only for the customary and usual CPA services and volunteer, or pro bono financial education activities. We are not asking for an exemption when CPAs are offering consumer financial products, such as a loan or investment products. In fact, areas of potential abuse, such as refund anticipation loans, are covered by other provisions of the bill. We are encouraged by recent press reports that Chairman Frank is considering exempting professional services from the reach of the bill. We appreciate the opportunity to testify today on impact of the bill that will have effect on thousands of CPA firms that are small businesses and their clients, many of whom are also small business.